This video is for the beginner trader who want to learn how to do trading and what type of things you can do trading, and it's from the beginning, like from zero, and you want to know what trading can do and everything. I will show you in this lecture. So first of all, the what is trading. So in trading you can do like trading like currency, we call forex, like USD to different pairs like coming GBP, JPY, like different countries currency. Plus we can do the commodities like gold, aluminum, copper, silver, that type of commodities we can call. And another coins like Bitcoin, everything you can do that trading as well. Plus you can do share market like stock market. You can buy company stock and you can buy and sell. So basically in a trading is you can do buy or sell. So this what I'm telling you is the leverage trading. So you open the account and from the different brokers whatever you prefer, and in broker account you put some money, like start from the $100, and you start trading. Like if you think the market going up today, so you going up like that, you buying from here and you just cut sell here. So whatever the this moment you make the profit, if you satisfied with this profit, you can sell and book the profit, and you can book your profit every day whatever the profit you decide, or I'll show you how the market move and you can book your profit where the market actually try to go. Okay, so I'll show you where you can book your profit and where you can do entry, everything I'll show you step by step. But basically I'm just telling you what trading can do. So trading normally you do buy and sell. Okay, so I prefer you do only gold. So this is the best thing in a gold. If I show you the gold chart, so this is the gold. Okay, in a goal it start from here, it always go up, it never go down. Okay, if go down, but you can see it go up and down, but it never go like against the price. If it always every year the gold price getting more and more higher. Okay, if you do the currency, what you can see, if I show you the month. Okay, currency you can see it go higher, then go deeper to the baseline point, and again it go up and again go down. So it's hard to predict. Okay, you can predict with the setup and everything what I'm going to teach you, but it's really hard because currency here you can see British pound and Japanese yen. So this is two different currency. So this currency value depends on two different countries. It depends on London and Japan. So you have to look after both countries data, and you have to check the country's performance and everything. Is it good, like countries developing good? Is it like citizen living there is like get more jobs, and that type of data you have to look after. And both countries you have to check, and based on that the price it move. Okay, so it's so hard. But in a gold you only look gold spot US dollar. Okay, so this is the gold spot US dollar. That means you only focus on US currency dollar. Okay, so that's easy. You look after US data and you trade. So you don't have to think like two different countries. And in a gold, what gold do? even something happen like war happen, what they do, they buy more. Whatever the situation coming, gold is the perfect thing people buy, and they keep it with them, and always their value is increasing just like a property. Okay, so basically trading, you do buy and sell. In a trading, you even go with the, you can check the chart, it's go high. Okay, so even the price go from here to here high, and again it go down. So if you think here, from here the price going up, okay, it's go up, then you buy. And you think the price going here and here to sell, you can sell as well. If you sell and you think the sell like going down till here, you book your profit, you can make profit in a sell as well. So this is two side of trading. This one you can buy and sell as well. Okay, so this is the trading, like leverage trading. There you can buy and sell. Okay, so basically I'll move to the candle. What is candle? So if I show you the candle, how the candle looks like. So this is candle. Just you like put a fire on. This is the line, you can see the green line. This is bigger time frame. Okay, so this is the line, you can see. Okay, this line we can call wick. Okay, we can call wick, WICK, wick. Okay, so okay, so that's the wick, we can call wick. And this wick just like a candle. Okay, so the candle, you just put the fire, the top side we can call wick, and if the bottom side there is a line, we can call shadow. Okay, that's a name we use in a trading. So this is wick, and this is shadow. Okay, so this is the terms we call. Okay, so how to identify candle? This is top part wick and bottom part shadow. Okay, so how the candle form, like every day, this is daily time frame. So basically I'm just showing you chart, but where you can watch the chart, I show you the, this is the application called trading view. You can search trading view in a application. You can search in the application, you open the new account, and you have to remember the account. Okay, so in case you forgot, this is the free, so you can make it free, but this is the, you get the like basic version, you can't do like whatever some extra features, but at the first beginning you just need the basic version, you don't need to spend more money. You can use the free account, but in free account you get the, at the bottom you get the advertise, that's it. It's not like playing videos like that, so it's okay, you can still use it. Okay, so that one, this application you can check the charts, you don't do trading here, you just do only check the charts. Okay, here you can check the chart very easily. You can zoom in, zoom out, everything. And in this application you have to search the gold or XAU USD. Okay, so when you go watch list, here you can press the plus sign, you just write down XAU USD. Okay, and you use the Oanda chart, that the first one, that's, and you can select the plus sign and it will come to your watch list here. Okay, and you just open that chart. Okay, so when you open the chart, your chart coming like that. You can use the different time frame. So chart coming as a time frame, so all the time frames is coming here. So what, which one I'm using at the moment? 1 day, weekly chart. So this is one candle. Okay, this one is one candle from here to here. That green candle is only one candle, but this is weekly candle from which day? Monday 5th January to 9 January, I think. Yes, when I come to the daily time frame, it's coming here from here. Okay, so this is the candle start and this is the candle finish. So this is the time frame I show you. The one box is the weekly, but when I come to daily, it's coming Monday, Tuesday, Wednesday, Thursday and Friday. So 5 different day. Okay, so the candle form every day, every hour, every minute, every second. But if you want to check the candle, you can just switch to 4 hour. So this is 4 hour candle. So each candle is 4 hour candle here. Each candle is 4 hour candle, and on the right hand side you can see the price here, plus you can check the timer here. So this candle is for the 4 hour and still 2 hour and 26 minutes left. Okay, so that way the candle form, and based on the candle you do mostly trading. Okay, so this is candle, how it form. I hope you understand. So every like you, whatever the time frame you want to use, you can use, but that's a different story. I just want to show you like different time frame how it form. And if I show you from weekly you can see only green candle, 2 3 red candle and rest green. Okay, when you come to daily, see, you can see more red and green, up and down, more up and down. If I come to 4 hour, it's like smaller time frame. You can see the more deeper candle and everything deeper. Like if you want to do deeper analysis, you can break down to smaller time frame. So when you come to 4 hour, it's like coming more here, different structure, like it's up and down. Based on the structure you do trading. Here again 1 hour, see the structure. This is coming more details. You can check more candles here. Okay, so based on time frame you do the analysis as well, and you do trading as well, like based on the time frame. Okay, so time frame is important in a trading. If you want to do proper analysis, if you want to enter exit level, then you need different time frame. Okay, so this is the basic introduction about the time frame. And that the candle again, that's a candle, and only two type of candle it form in the market. One is green is going up and down, that's a different color, red. You can change the color if you want to, it's up to you. In a setting you can change everything, but basically green means up, red means down. Okay, so this is the basic information about the candle. Now I'm coming to structure. So what is structure? So candle always form here, one candle form here. Before going to structure, I go how to explain the candle. So all the candle market open as a Sydney time, 10 o'clock during the summer time. Okay, and when the winter start, the time changes and it open to 9 o'clock something. So, yeah, 9 o'clock. And for the gold it close for 1 hour. So when I come to daily time frame, okay, if I go 15 minute, see the market open here. So Saturday 10 January 8:45 it close, like 9 o'clock. Okay, 8:45 it start forming the candle and 9 o'clock it close. Now Monday 10 a.m. it start market. So Monday, like whatever the day open, 10 o'clock it open and 9 o'clock close. So here Friday 9 January 10 a.m. At the bottom you can see the time and date. Okay, and here the Friday 8:45, so 10 and 9, so 1 hour gap. Okay, so 1 hour market stay close. So how the candles start? If I tell you about the daily time frame candle, so candle form on the daily basis. Okay, so whenever the market start, the price coming at one level. If the market start, there is no candle here. Okay, it's candle like that, but when it start, it's going up and down like that, and it candle form. Okay, so when the market open 10 a.m., the price here, so this is the price the market open. Okay, so wherever the market open, that one, if I put the line here, so price here is the 46.35. Okay, when the market open and going down, it go down, but suddenly something happen and go up. Okay, so what happened when the market open here, it go down, but you have to know the how deeper the market go. So what market do? They leave line. Okay, they leave line at the bottom. That means the market go that much bottom and go up again, because market open at here 35. So this is the opening range. So this one is open. Okay, this one is low, candle low. Okay, and market still running. Okay, but when the 8 o'clock market come here and 9 o'clock market come to here, something happen. So what happened? The line leave here like that. So what do you call this? Is the wick. How the wick form and shadow form. Hope so you understand. Market didn't close the price here and it leave the line here. Same market price didn't go at the bottom, but it go up and close here. Okay, so what that mean? Close here. So you can see the box That box is we call body. This is the candle body, where the volume consider. So people here have still volume here. That means the whoever buy or sell is still here. And this is the wick and shadow. There is no volume, there is no body, that's only line, because the market open here and close here. So body only consider where the open and close. It not consider how much high it go or how much the down it go. Okay. So that's a different thing. That's where the candle form. Here I show you the example. Today market open 45.20, go down little bit, then go up. It go up here 4600. It go down. When it go down, it leave line here. You can see the green line, and at the bottom as well you can see the green line, right? Okay. So that way the candle form. When the day close, like here, see the open here, coming down here and up here, then close here. If I put the line here, then it's easy to understand. Okay, if I put the line, this is just I'm explaining the candle. This is the different tool you can use. Okay, and okay. So I put the two red line. Now we go 1 hour time frame. So now we can check here. The market coming here, go down till here, then go up here. So how we track? Go down here, go up here and close here. So when the market open here, okay, like that, go down here, go up here and close here. Okay, and leave whatever the upper and down, that's wick. Okay, wick and shadow. So when I can transform this time frame to daily, you can see this is the volume it left. Hope so you understand the candle, how it form and everything. So this is just the basic about the candle, how it form. Okay, like it form every day. So how it leave the line here up and down. Hope so you understand. In a red, just different, open here and close here. Okay, when it close below the opening price, then it consider red. Close above, it form green. Okay, so that's the candle formation. So now we go to structure. Okay, now you understand candle. Now we go to structure. So how the structure form? So everyday candle form here to here, closing here, open here, close here. Next day candle here, open here, close here. Next day open here, close here. Same, there is a so many candle. If we consider lot of candles, okay, like 10-15 candles, then we understand. If I see only this much, okay, okay, if I show you only this much, what you can see here, only green candle here, 1 2 3 4 5 6 7 8, whatever. Okay, so all candle is green, it going up. Then you understand, okay, the price is going up. Okay. When it form red candle here, you consider, yeah, it's going down. Based on up and down movement, you can see the structure. Like you can see the up, down, up, down again, like that. Okay. If I show you here, yes, see. So structure is like up, down, up, down, up, down. When it form up and down, then its structure form. Based on the different structure, you analysis the market and put your entry and stop loss and profit based on structure. How the structure you can check, I will explain everything. Okay. So this is the structure you have to check every time when you enter the position or open the position in the market. So basically how the structure it form. So I show you the market go up, down, up, down, up, down. When it go up and down, okay, now you can see here the lowest point. Now you can see here, this is the highest point. Again it go down here, high, low, high, low. Okay. So when the market is going upside, it always form low, high, low, high. But what is here? So this low is not break. This low not break. This low not break. This low not break. But what about high? This high break here and new high created. Again come down, again high break, new high created. What's that mean? This previous low is not break, but what happened? The high was break and make another high. Same again, go down but didn't break the previous low, but it break the previous high and create new high here. So this we called uptrend. So market price going up. When the market price going up, it never break the low. This low protected, this low protected, this low protected. It never break low. Okay. Similarly, when market going down, okay, so this is the high, this is low, this is high, but this high is not break, but this low break and another low created. Similarly go high, but this high not break, but this low break and create another low, and go up and another high create, but this high not break, but this low break. This is called downtrend, the market going downside. Okay. Whenever the market go down, high is not break. Okay. This structure I'm showing you is for the bigger time frame. Bigger time frame means weekly, daily, 4 hour and last is 1 hour. Okay, whenever we do analysis, we start from week, then coming to daily, after daily we coming to 4 hour, after 4 hour we come to 1 hour. Okay, so market always make structure like up and down. Why I'm telling you? Because on the bigger time frame, just like weekly, you can see say 5 days candle in a one candle. That means you have the bigger picture. When you have the bigger picture like here, this is the gold. Here you can see weekly time frame. You have the bigger picture here. What you call this is uptrend. Price going up. Okay, if I zoom in, now you can see up, right? So what you think? You try to do buy, right? When you go to daily time frame, what happened here? It go up, coming down, then go up, coming down, up here, coming down, and up here. Now you understand why the time frame important. In a weekly you see only one line, but in a daily you can see up and down. So weekly basis you just check the trend, it's going up or down. You coming to daily basis, you check more detail, like where it coming down, where it coming up. Even you go more inside like 4 hour, okay, you can see more structure like up, down, here up, again come down, then up. So this area is extra in a 4 hour, but in a daily you didn't see, right? Again come down and up. So that's the beauty of time frame. When you come 1 hour, similarly you can see more structure. See here it go up, here structure again up, down, 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 more structure. Even you go more deeper, you get more structure. So I just show you only up and down, up and down. Okay. In a chart, how you can see up and down. Okay. If I zoom here like that. So on a chart, this is the low point. Okay. How you consider the low point and how you consider the high point? Based on structure, I show you this way is high and low. Okay. So this low is not broken and this high is broken here, and again low created. So based on structure, we use the terms. When the structure break here, we called break of structure, BOS, boss. Okay. When the boss happen, this high and another high created when the boss happens. So that two high, okay, that two high in between the whatever the lowest point, whatever the lowest point. the price. Wherever the lowest point, we consider the lowest point. If I show you the example here, so the price go up here, this is the high, it break, so this is boss. Price go up and down, but here which one is the lowest point, you have to find. So here, yes, this is the lowest point, so we consider this one is the lowest point. Okay, and this is the break up structure. Now what, price go up, what happened, created another high here, and come down and come, and again break here. This is BOS, this is low. Okay, now it go up again here, and this created another high. This line is continuous, it keep going up, it didn't come down. Okay, now it come down, what happened, up and down. Now what, the low broken. In a high trend, I told you the low is not broken. Now what happened, low breaks, high not break, but low break. That means the trend is change, right? I told you, like in a uptrend, the low is protected, low is not break. But in a downtrend, high is protected and low break. Here what happened, whenever the uptrend happen, okay, down is protected. Now down is broken, and high is protected. Now what happened, coming down, again low break. Whatever the low between this low and this low, this is the highest point. Okay, and again low break, this is the another low created, and between two low, this is the high. Now what, this low break. Okay, between this low and this is the highest point. Okay, so this is the high and low, here another low, so we don't consider this low because this is the continuation. Okay, like continuously falling till here, so this is the low. Okay, now what, this is the low, not break, this is the high, break. What do you mean, when high breaks, that means it's going uptrend, right? Now what happened, this is the low, this is the high. Now this low is protected, right? Now what, this low protected and another high created, this high broken and created another high. Between two high, we, what are the lowest point, this is the low, now protected low. Okay, Similarly, you keep going up, down, up, broke, this one down, this is not broke, up, up, this is continuation, this low not break, and it keep going. Now you understand why the structure is important. You keep going, and you make more and more profit. Based on structure, you can understand is it going up or down, right? Why the higher time frame structure important? I did it on 1 hour, okay? 1 hour is important. This is the lowest I'm telling you to do the structure, because based on 1 hour you get it perfectly, like sure shot. Is it going down? That means it's going down. If you go in a 15-minute or the smaller time frame, there is more structure, like more pattern develop, and you get confused and you don't get the proper direction. Even you think, okay, this one is going down, but it's not going down. What do you mean here? Structure break. This is just a normal structure break. The basically, if you check the structure, this is just insider structure. The main structure is here. This is the down, this is the high point. Between high and low, which one break? This one break and created another low. You don't see the internal structure. You have to check the bigger structure. This is the low. Now what? And this is the high. This high break here. This high break here and created another high and created another low. No, this low is not considered because this is the internal low. My mistake. Now come here and go here. This is one structure, but this one is continuous. Okay, if you see on a bigger time frame. Okay, so that's so confusing, so that's why I prefer to do at a bigger time frame analysis. Why the structure important? Okay, now I want to show you how you consider the pullback. So whenever the uptrend going, okay, whenever the uptrend going, this one area, the red candle, it's going down, but this is not actually going down. What do you call this? Is you call pullback. This is just a normal pullback. We have two different type of pullback. One just like internal pullback, and another pullback is retracement, like this kind of pullback. See the bigger red candle, that means it's pullback. But if you see the bigger picture, see this is the more green trend. This is just a normal pullback, it coming down and again up. So that way you can understand the higher, this is the higher price and this is the lowest point. Okay, I told you the structure like that, right? What that mean? In the bigger green candle there is a small red coming, right? Similarly here, in a bigger green candle there is a small red candle. This is the pullback. When the pullback come, you wait for the time. When it price going up, you enter the buy and you buy and make profit. Okay, so why the pullback? Whenever the price going up continuously here, today or tomorrow price coming down, even little bit it coming down, then going up. Why the structure create? Because it go up and down, up and down. So when the price going up, the high create, then again coming to create another low, right? That we call structure. So this high is going to break, this low is protected, again he create another low which is protected, again it high break. So whenever the structure form, you have to identify. So first, whenever the price go up, let the price go up. You don't do trade here. When coming down here, okay, and again go up and create boss. Okay. Now you know this is the uptrend. In uptrend, the high breaks and create another high. So you don't trade here as well at the beginning. Now this is the pullback coming. Here the you going to buy. You going to buy here, and this is the breakup structure, right? So another breakup structure coming. So where is your target? Here. Here is your target. You buy here, you make profit that much, and your stop loss here, because this low is protected, right? If this low break, that means downtrend. You don't move your stop loss from here to there. You think, oh, this is another low, I'll put my stop loss. No, this low break, that means downtrend coming. Okay, so the low is always protected when price going up, and high is always protected when price going down. So structure is important. Based on structure, you can put your stop loss and you know the target. So I show you, this is the uptrend going, okay, high created, coming down and again high. This is breakup structure. Okay, now you know this is the breakup structure. This low is protected, this low coming, this is the green candle done. Now what you do, you enter here, you enter here. Okay, if I do the replay chart, okay, this is the breakup structure done, this is the protected low. Now you do like 10 quantity, okay, you buy here, you put your stop loss here, you put your target here, okay, because this one is the breakup structure and this one is the protected low. So on this trade, if you put 10 quantity, when the breakup structure happen, you making $490, and if you lose $460. But I told you, this is the protected low, and market always create another low. So this could be the another low, right? If I move my stop loss here, my loss coming less $300. Now the price go up. Okay, my target done, profit here. So I make profit $500. So this is the way you have to wait for the structure. When market makes structure, making down, making break of structure, yes, this is the time. Again when it coming down, when it going up, yes, this is break of structure, and this is protected low. You enter and make profit. Easy. So you have to understand the structure. Okay, so how your setup work? Basically, you coming to 1 hour, check the high coming down, and the high is broken. Yes, broken. It go more high, coming down and going up again. Then this is the entry point you put. Okay, I'll show you another thing. Based with the structure, you add another thing to get proper confirmation. Okay, so this is, I told you, basic structure, right? But I want to add another thing. How the structure you consider break up structure. Okay, break up structure you only consider when this high break with the body. Okay, break with the body here, body. See, this is the body come here. Yes, this is break up structure. But sometimes you get the wick, that means only the line. That time you don't consider break up structure. In case, I'll show you. Some of the time you can see. Okay, that doesn't mean it break up structure. Okay, here, if I zoom in, I put the line here. Okay, if the line go here, and this is not the break up structure. Okay, just the wick come and go down. If you consider this one is break, no, this price is not break. This price need to break with solid body, with the body closing. Okay, when the body closing happen, then you consider break up structure. This is not a break up structure. Okay, this is we call liquidity grab. This is different concept you going to learn later. So this way you don't consider breakup structure, and if you think, oh, okay, I'm coming here and going to buy here, no, you're not going to buy, you're going to lose money here. See, it fall down, more fall down. Okay, so this is the way you have to do. Okay, you don't consider even this one is not breakup structure. Even we consider this one is breakup structure, because why we take profit here at this line, because sometime the market close the body upside and it keep going up, keep going. Okay, you thinking okay, similarly here you put the here and break up structure happen, but still price going up, then it coming down. Okay, so you thinking okay, similarly same thing going to happen here, it going up and I'll put profit here. Instead of here I put my profit here, somewhere here, but price never come this way, it going against. Okay, this is why we always take profit at break of structure. Sometimes it just go weak and reverse the market, just like I show you before. Sometime yes, it going down and come again and break again. Just like here, see. But what happened after that? After break, liquidity grab. Whenever this thing happen, okay, this thing happen just like week coming here. So this week is another high. Now you need to break with the body here. So yes, this is break up structure. Okay, this is break up structure. Now we wait again. Here again you can wait and you can buy here. But what happened? Here the low break and it fall down. That means it downtrend start, right? So if it go down, that means low break again here. Low break, this is high. Now what happened? High is break here. High break, this is low. That means uptrend start. Now it going up and it break another high. This high going to break, right? Let's see it break or not. See it break, right? So this way you can check whether is market going up or down based on the structure. This structure is why I told you this one low, high and low. Okay, here high and low, this low break. Now we have to go here and wait for sell here, but you don't do till break of structure, it never reach. Why? And it go against, you try to sell here but it never go to break of structure again, but it go against your this high break and go uptrend and this high break. Why it happen? Because you just checking that only one time frame, one H. That's why I told you you have to check the daily time frame as well. In a daily time frame, this is uptrend, this one is just a pullback. For the uptrend, this is pullback, now up. Okay, so why the time frame important? To check your analysis. You can do analysis on daily basis, like this is down, okay, so probably I can see another 1 or 2 days down, so this down, another come down. Now what? Break up, now going up. But how you can make confirmation, I'll show you later how you can make like proper confirmation and everything, I'll show you. But I'm talking about the structure. So structure sometime make you fail. Okay, just I show you like 1H, right? based on structure you do trade. Sometimes you only check one time frame structure and that structure make you fail and you lose money. But based on, I'll tell you another thing you can add with that structure, and with that structure you like definitely sure it's going up or down. Okay, I'll tell you the zone, how you mark down the zone, and based on that structure it form, you check everything on that zone and you do trade properly. So I tell you one thing. Okay, another concept I'm going to add is FVG. So we do only structure today. Tomorrow I'll add FVG. So I just try to do like we add another FVG concept, just I told you, but we do it in a next video. Okay, so just try to do learn structure first, whatever the structure I told you, try to learn that one first, and if you have any question just send a message, I will explain more. And just try to do learn more about structure, because that's a structure it going to help you to put more entry and more profit. Okay, like you get proper entry and you know the proper stop loss and everything, because on structure you know the low or high which is protected, and you put your stop loss and you know the profit target here. So based on that you know like which what is your target and what is your stop loss. Okay, so that make you more sense about trading. Based on stop loss and profit you know how much quantity you want to add and how much you willing to lose. You like lose $10 but you make $50 here, like that. Okay, so that's a different story, I'm going to explain everything, but this one I'm telling you is about the normal how you put your trade just based on structure. Okay, now just try to learn about structure, do some back testing like that structure here. Okay, this one is break, this one low, this one my lowest low here, this is the low. So you can start with the lowest point. Okay, or if you do from the top you do with the one top here. Okay, this one, this low break. Okay, this is the downtrend. Okay, this one another low break, this is the lowest point, so this is the highest point again, this is the low point again, this break, and again this high is break here and this is my low protected. So I put some entry here and again it high break, again this high break, again this high break, again this high break. So this is continuously uptrend from here. Okay, from here it's up and down, up and down, up and down, up and down, up and down. So you have to learn from the structure. Okay, so try to do back testing from previous chart, go to the previous chart, do some break of structure and what is your lowest point, mark down, and you try to understand. When you try to understand then you know about structure, and I will add more thing in the next video and you do more proper trading and you make more profit. Okay, so I'll post another video tomorrow and hope you learn from here, and we'll see.